Vaibhav. In today's session of Visual JForex, we will be continuing with the stochastic series. Today, it's the turn of the stochastic fast. So far, we have already seen the utility of the stochastic momentum index and the stochastic indicator. Now, one more indicator of the stochastic series, stochastic fast. This is more sensitive compared to the other two indicators we have seen. So we will see how we can deploy this indicator on the Visual JForex platform to design and develop the profitable algorithmic setup. So here it is the stochastic fast. We don't really have the description, so we straight away head to the Visual JForex board developed by the Dukascopy Bank SA. Here we have this formula also I have included, and if you want to include the indicator block, then you have to go to the momentum indicator blocks, and here near the bottom we have the stochastic fast. In next session we will cover the stochastic RSI, and then we will be done with the momentum indicator series, and we will move on to the indicators of the different type. For this session we will use the on candle as our start point, and then we will see how we can define these input parameters so that we are able to get the output value which will guide us in finding the profitable entry and exits. So here we have to define the six input parameters: default instrument, period, shift is the look back period, and the fast K period, slow K period, and the fast K, moving type, MA type, moving average. So that is one more factor, and then depending on these input parameters we will get the output parameters. The formula you might remember if you have seen the prior two sessions. It's fairly simple to calculate. We simply take into account the difference between the closing price and the low price for a given time period, and then we divide that by the highest and the lowest value over the same time period, and we multiply it by 100, so we get the value in percentage terms. So if the value is trading well above the lower price, then we get the percent K value which will be on the higher side, and that is indicative of the fact that momentum is on the bullish side. Here this is the chart for USD JPY on the 1 hourly time frame, and I have plotted the stochastic fast with the default time period of 5, 3, and the MA type is SMA. So here I will explain to you what K stands for and what D stands for. So here in this case we don't really have the D. This slow K is actually the SMA for last three time periods of the percent K, fast percent K. So we are simply taking into the SMA of this fast percent K, and that is the slow percent K for this time period of 3. And this indicator, as I said, is more sensitive compared to the other indicators. So as you can see from chart, we see frequent moves as soon as the price moves in different direction, and because of it is closely following the price action, we will always be getting these moves which will be in tandem with the fluctuation being seen in the price action. This is one of the drawback as well as one of the utility. One of the advantage of it depends on how you use this compared to the other stochastic indicator. And let me briefly explain to you the combination, how we can change this combination. If we want to work on a longer time horizon, then all we need to do is simply change this time period, and here all you have to do is change it and try out a different version, and you can see that this stochastic fast plotting has changed, and we have the plotting which is a lot different than what we were observing when we were keeping the slow k period at 5. Similarly, you can change the percent fast percent d as well, and all you have to do is try out a different value, and we will have the SMA of the fast percent k being taken over that given period of time. And as you can observe, we have these fluctuations, but these fluctuations have diminished, and now we have a lot more clarity as we are dealing with the longer time frame. So these are some of the changes, but you will have to see what are the changes which are likely to prove more conducive to your trade setup, and because of that you will have to do a lot of experimentation and see what kind of setup is likely to prove profitable, and then depending on the observation and the test runs you will be able to figure out the combination which is more likely to prove profitable. So if you were to develop this algorithm using the stochastic fast indicator, you will first have to choose this default instrument. Now for today's session, we can choose any of the default instrument. So let us take different than Euro USD or USD JPY. We will take another instrument just to make sure that this platform supports whole range of instruments which are provided in this drag down list. The time period our means mine has been hourly as the favorite, but in today's session let's try out different combination, say 15 minutes, and that should work fine. USD CAD, and the chart is of 15 minutes, so we carry out the same changes here. USD CAD, let me see where it is. Okay, so we will have to go below and take out the USD CAD as it is not yet subscribed. Okay, so here is the USD CAD, and I will change it to 15 minutes each. The candlestick period is now of 15 minutes. So here we are looking at this USD cash chart, and we have also carried out these changes in the stochastic fast input parameters, and because of that we have this chart which is a lot different than what would be the case if we had kept the default values of 5 and 3. We can also change the MA type, the moving average type. We can decide to use different moving average, and that is also going to be supported. Shift is the look back period. If you want to take the current value, then the 0 is all fine for the shift. If you want to go back in time and take the take the value, output value at that point in time, then you will have to change this shift appropriately. Then here comes the input parameter in which we have to fill in the fast percent k periods which is going to be used for calculation. Let us try out 21. We will also carry out the same changes on the chart to see how this combination is going to look like. Here we take 14, and let us also change the MA type to different moving average. For example, let us take HMA, Hull moving average. We have carried out the changes here. Fast percent K period has been changed, and so is the slow percent K period and the type of the moving average. Now we carry out the same changes on the chart to see what kind of change will be visible here. Please observe this plot of the fast stochastic. Now we are going to change it to 21, and the second parameter to 14, and the moving average type is also going to be changed to HMA. As you can see, we have a lot of change being the change is visible because we have changed the input parameters, and as a result of that we have this difference in the prior plot and the current plot. So here we have this topsy-turvy moves happening as we see the price action jumping up and down, and only when the price action is trending we get sort of one way move, but it hasn't really lasted much, and we see these crossovers happening too frequent for our comfort. So I think this combination is also not going to do our job, and we are more likely to be forced to change this. So let us try out a different combination, or we try to increase this. We can do that as well, and we increase this one also. So here we have this combination now where the first percent K is of 30, whereas the first percent D is of 21, and we have these crossovers happening. So we have to make the algorithmic setup after observing this chart and the kind of pattern we think is likely to prove profitable. And once you build that, you test it on the JForex platform, and there, depending on the results, what kind of results the algorithm is able to generate, you can think about going in for the trading on the live platform, or simply keep it running on the demo account. So here we will be getting these output values, first percent K and the first percent D, and depending on the structure we can think about going in for a trade. And I think I also should give you some kind of possibilities where you can think about going in for a fresh trade. So whenever you see that the value has been below 20 and then the crossover comes in from bearish side to the bullish side, that is this first percent K crosses above the first percent D, we can think about going in for a long trade. And when we see the opposite happening, when the first percent K drops below the first percent D, we will be getting the entry point for short sale. So that way also we can use this, but to make sure these fluctuations don't play havoc with our plan, we will have to figure out some additional parameters, also some additional indicators which can be used in conjunction with these indicators, and that way we are likely to prove more profitable than simply relying on the stochastic fast. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you on Monday.